This is a quick look at the loan estimate. This is a form that all lenders are required to give all borrowers in residential transactions up front. And this is supposed to be the lender's best guess at what the fees are going to look like. So I wanted to, in this really short video, I wanted to walk you through the form really quickly. Just note the form you're going to see here, I pulled off the government's website. So it's a made up form, and you can see when we look at the dates, it's really old. But again, and some of the fees and stuff you're going to see in here are not really applicable in North Carolina. But again, just trying to show you the form and where you can find the information that you want to find on the form. So you can, oh, by the way, too, this form is meant to match up with the closing disclosure that you will receive at closing. So here's what the loan estimate looks like. Here's the closing disclosure. So you can see how they're formatted the same, and that is meant so that you can take the forms when you get to closing, you can hold up your loan estimate and hold up your closing disclosure side by side, and you can look at the two and compare the two. Here's what the lender told you up front, or here's what the lender estimated for you up front as far as the estimated costs. Here's where you actually ended up with your costs. So let's look at this loan estimate. You can see it's got the date issued up here, the applicants, the property address, the sales price. These folks are buying the home for $180,000. They're doing a 30-year loan. It's a purchase, not a refinance. It is a fixed rate loan. It's not a variable loan. It's a conventional loan as opposed to, some of the other loan types. If it were FHA or VA or USDA, those would be checked. The loan number here. And this is really important too, is your rate lock. This tells you whether or not your rate has been locked in. And if so, how long has it been locked in for? So if you have chosen not to lock the rate in, then that question would be no. But if the rate is locked in, it's going to have that checked there. Okay, here's your loan terms. These folks are borrowing $162,000. They're buying the home for $180,000, so that means they're doing a 10% down payment, right? $18,000. The interest rate, the monthly principal and interest payment. Now, this is not their full payment because this doesn't include the escrow, prepayment penalty, and balloon payment. And then you can see these questions here. Can these amounts increase after closing? No, because this is a fixed rate loan, so the rate can't go up. Also, the monthly payment, principal and interest payment, can't go up because it's a fixed rate loan. If it were a variable rate loan, that would be answered yes, those two. Note 2 here, this is just talking about your principal and interest payment. Your overall payment might go up a few dollars over the years. Why is that? Well, because some variable stuff is in there like your property tax and your homeowner's insurance. Those are things that the lender doesn't control. And we all know that taxes typically go up, they don't go down. Homeowner's insurance, typically goes up, it doesn't go down. Not always, but typically it's going to go up a few dollars. So just know that your payment could fluctuate a little bit year to year because of the escrow, even if you have a fixed rate loan. Does this loan have these features, either a prepayment penalty? Now, this one is answered yes. That is highly unusual for you to have a prepayment penalty. So you should expect that to be answered no, probably, unless you're doing some type of unusual loan. Same on the balloon payment. This is a feature that allows the lender to call the loan after some period of time, let's say 5 years, and the loan maybe is set up to have, maybe not to call the loan, but you would have a balloon payment after that period of time. And that means at the end of so many years, whatever the balloon period is, let's say 5 years, whatever the balance is at that point, you've got to pay it off. You either have to pay it off or you've got to refinance the loan into some other type of loan structure. Again, that would be highly unusual for a residential mortgage. Your projected payments, you can see you've got payments for years 1 through 7 and years 8 through 30. Well, why is it changing? These folks are doing a 90% loan, so they don't have the full 20% down, and that means they're going to be paying PMI, or private mortgage insurance, on a conventional loan. You can see right here, that's $82, but that is projected to drop off after year 7. It's going to go away and their payment's going to go down. And then you can see here estimated taxes, insurance, taxes and insurance right here. If it had homeowners association fees, those would be listed in this section here. So $206 a month for the escrow, and that's where we wind up at the $1,050 total payment when you add in the mortgage insurance and the taxes and insurance, property taxes and homeowners insurance. Estimated closing costs. This is including all the costs you would need, not just your actual fees for all the stuff you're doing to obtain the mortgage, but this also includes other things that are outside of the mortgage, like your homeowner's insurance. I mean, you would have that even if you weren't getting a loan. Your property taxes, you still have to pay those even if you're not getting a loan. So all that's included in there as well. And then your estimated cash to close here is including your down payment plus any closing costs that you would be paying. So if the seller's paying some closing costs, we'll see a credit for that later if that is the case. If you've made a deposit, we'll see that as well. This is the net figure that is projected that you're going to need to walk into closing with on that day. Again, it's not exact yet. This is just an estimate, but this is what the lender thinks you're going to be bringing to closing. Later on, when you get your closing disclosure, that figure will be listed there all the way down to the penny. Okay. Page 2 is kind of your details of, and this is really includes a breakdown of the closing costs. Here's the lender fees. In North Carolina, it's going to be more typical that you're going to see an origination fee as opposed to an underwriting fee and an application fee. But again, this is where that would appear. Services the lender is going to perform, but that you cannot shop around for, like the appraisal. You can't pick your own appraiser, your credit report, agency, that sort of thing. The lender's going to get all this stuff done on your behalf, and they have their required service providers that they would use. And so that is the cost for those service providers. Services you can shop for if you want to have, for instance, in this case, they've got a termite inspection, a survey. That's a really low cost for a survey. But then all your title fees in North Carolina, the closing attorney. So you will shop for the attorney, or either your real estate agent will pick the attorney, which is very typical in this area. And then, this would just include some projected fees here of what the lender is used to seeing in their particular market. Other costs like recording for the county, your homeowner's insurance premium, you'll pick your homeowner's insurance provider, agent, the prepaid interest. So this would be interest from the projected day of closing until the end of that first month. Kind of your odd days interest there. Because after you close, you wouldn't have a payment for a month. You're going to have your first payment comes due on the first day of the second full month. And then you're going to deposit some money into your escrow account for next year's taxes and insurance. And this is where the lender is going to show how much money is going to be deposited, again, projected into the escrow account here. This one is your owner's title policy, and you'll notice it says optional. So that is not something that's required for the loan process. It's usually recommended by the closing attorney, but and that's why it's listed as optional. So that is the projected fee in this case. Again, I want to make sure you understand. Don't take any of these figures as to mean that is what you're going to pay, because this is just a generic form that was put together as an example for all states. As you can see, it's 8 years old now. So things are different from state to state. And for instance, the title owner's policy in most cases wouldn't be that expensive in North Carolina because it would be tied in with the regular lender policy. So again, these don't pay any attention really to the numbers here. So you total all this stuff up, and there's where you come up with that $8,054. Here's the down payment. These folks are doing a 10% down payment, $18,000. They've already paid a $10,000 deposit. So that's where we wind up with the $16,000 that's left estimated for their closing. The last page here just gives you some comparisons as far as what this loan is going to look like. You can see here after the first 5 years, if you pay every payment on the due date and you don't pay any early payments or extra payments or late payments, you will have paid that much off. Or you will have paid that much in principal and interest, mortgage insurance, and loan costs. You will have paid the principal down by $15,773. This is your annual percentage rate. That's just it's supposed to be reflective of the total cost of the loan in the form of an interest rate. I did a separate video on APR. So if you want more info on that, check that out. I won't take the time on this one to explain APR. And then the total interest percentage, the total amount of interest you'll pay over the loan term as a percentage of your loan amount. Again, these two figures here are assuming you keep this loan for 30 years because this one's a 30-year loan. So they're really not applicable because it's highly unlikely you're going to keep this loan for 30 years. Most people don't. And then it's got some information in here about the appraisal, whether this loan would be assumable or not, your homeowner's insurance, late payment fees, stuff like that. You will sign and date down here at the bottom, and then you're ready to go with your loan process. So I hope that's helpful to you. If you have specific questions about your loan estimate, please feel free to reach out and I'll be glad to help. Thanks for watching. We'll see you soon.